Morning, ladies and gentlemen. DBS Bank just released its results this morning, 2 hours ago. What does the result holds for you, the investor or the trader? Is it time to take profit? Is it time to actually let the stock ride? This is what we're going to endeavor to study the results, analyze for you, and help you to decide whether you should be holding on to DBS shares or taking your profits. Results, ladies and gentlemen, showed exactly what we have warned just last month in our video on Singapore banks, that the net profit for DBS have slowed down in 2024. Now that's because, ladies and gentlemen, if you look at the components of the profitability of DBS Bank, it basically came from three sources. You saw fee income up 23%. It saw treasury, customer sales, and other income up 21%. And it saw zoom in into the fourth quarter numbers alone, ladies and gentlemen. You notice that DBS posted a whopping 41% jump in treasury customer sales and 40% jump in markets trading income just for the fourth quarter, meaning from October to December last year. In our last month's video, we told you that that was something that's expected, but it's unlikely to recur simply because that period marked the change in the direction of the 10-year bond yield, which means that therefore, if you are a trader as what we are, you can see that there's a perfect opportunity to be making profit. Yes, ladies and gentlemen, at GCP Global, we teach you the turning points and identify for you the turning points so that you can make once in a lifetime money and wealth generation in the critical time, as what DBS bank traders have shown for you. But understand, ladies and gentlemen, it is not something that will recur all the time. Also, in our last month's video in January, we have shown you essentially why we were taking profits, or why I was taking profits from my positions in DBS Group, at and near $45 or higher. As you can see, ladies and gentlemen, these were the three circumstances, where DBS Bank was at $45, which I have taken my profits. Now, and you may be asking, why am I taking my profits on DBS while still holding on to my positions in OCBC and UOB? Now let's rewind back for those of you who have not been following us when we have been recommending these stocks in our various investment classes in the last 5 years. Back during the pandemic, you notice that essentially DBS up to this year has been outperforming the other two banks. DBS Bank is up 84%. That's almost 100%. From the lows of the pandemic in 2020. You can see that the chart here shows as up 85% compared to OCBC 52%. Well, UOB is not shown here, but essentially it's up in the region of 48%. Now, this chart shows my positions in OCBC Bank. From my CDP statement, you can see, ladies and gentlemen, as of Friday last week, my stake in OCBC is worth 1.35 million. To be exact, is 1,355,665. Now, essentially, my cost about 5 years ago during the pandemic low was about 874,000, which means that I'm sitting on a profit of 481,000. Yes, close to half million. But yet I'm still keeping the stock. But yet I'm selling off my DBS Bank. Now, in our classes, we actually share the reasons why we keep to our winners. And one of the reasons why, ladies and gentlemen, is the fact that when in 5 years ago, when the shares for DBS dropped below 20, well, we told our investors, yes, in baseball parlance, you can see that this is a baseball shot. We swing for the fences, and it was at that time at $20, time to swing for the fences. Yes, ladies and gentlemen, you may be asking when to swing for the fences in certain banks, in certain stocks at the right time. That's what we specialize in. But in our video, ladies and gentlemen, we also want to share you this other important asset or facet of investing, and that is when to take your profit, and what circumstances drive you. Because if you don't take your profit at the right option time, there's really no profit to be taken in the first place, right? So many books have actually reiterated how, when, and what to buy. But in reality, ladies and gentlemen, you think two hands to clap. Essentially when to take your profits and how to switch it, to the right stocks. Basically makes what we call the baseball parlance swing for the fences lead to a home run. And that's what we teach in our investment classes. Back to DBS results this morning, you can see, ladies and gentlemen, one of the things that we have been stressing, that is actually wealth income or fee income from wealth management will slow. You see last year, 2024, you saw DBS wealth fee income soar from 1.5 billion to 2.2 billion. Ladies and gentlemen, this is unlikely to be repeated. Secondly, as forewarned earlier, ladies and gentlemen, we reckoned that essentially the trading income slowing down already has taken root in the fourth quarter. Now, this is actually the sequential change in the fourth quarter. You can see that the trading income is already down by a whopping 52% in the fourth quarter of this year. I reckon essentially that this year, with the interest rate staying where it is, that is the 10-year bond yield ranging between 4 and 4.5%, the trading opportunities would be limited. Well, the other reason why is that, ladies and gentlemen, you can see that essentially DBS has actually reached a point where the cost to income ratio has actually crept up from 37%. Yes, if you look at the diagram from the first quarter of the year, right up to 44% at the end of the year. And you can see, ladies and gentlemen, DBS Bank has already cut corners in many ways, right? And yet you see their cost income ratio increase. I doubt, ladies and gentlemen, that for this current financial year 2025, they can keep cost income ratio at the 40% level. This means, therefore, that cost to income ratio, ladies and gentlemen, will likely to continue to go up. And ladies and gentlemen, I expect that 2025 profits for DBS Bank will drop further. Why? Because its fee income will slow. Now you can see, ladies and gentlemen, this chart shows you that the fee income of DBS Bank vis-a-vis OCBC Bank and UOB Bank. Now DBS been shown by the red arrow, was or outperformed its competitors. Now I expect in 2025 that will actually come down per normal as to the rest. Then you may ask, ladies and gentlemen, why is it that DBS was able to outperform in terms of fee income? Simple, ladies and gentlemen. This next chart shows you that since COVID-19 happened, DBS have had that advantage of a strong deposit base or a bigger deposit base vis-a-vis OCBC and UOB. And that's why you can see their credit costs in the last 4 years essentially has been lower than its competitor. But I'm not going to bet my money, as what we bet in baseball, that this will continue for 2025. I don't think it will soar above its competitor, but I would expect that it will actually come close to what the market is actually doing. Now that comes to our last slide, ladies and gentlemen. That is, why am I therefore taking my profits on DBS when it's at 45 or have been taking since last year, while keeping OCBC and UOB in my portfolio, even though I'm sitting on 500,000 profit on OCBC. My shares in UOB are parked in another private banking account for which I basically wouldn't be looking to sell, so I'm not showing you this position as of today. Is this okay? When we teach our classes, we help you to look for margin of safety in all our stocks, in all our investments. In DBS, ladies and gentlemen, you can see from the chart here that the price to book value in the last 20 years, DBS Bank now has reached a historical high in terms of price to book value of almost 2 times. To be exact, is 1.83 as we speak. So it's 20-year high. It's even higher than the likes of your top banks in the world. That's your Goldman Sachs, Morgan Stanley, and JP Morgan. Well, kudos, to the management that have managed the DBS Bank well. But the key thing is going forward, can it maintain? Well, I'm not willing to actually take my bet on that because one, the pricing for the stock is priced for perfection as a price to book value 20-year high actually shows. The second aspect, as I've showed and I discussed in my last video, you notice that, ladies and gentlemen, I actually held 77,000 shares in OCBC. For the same 77,000 shares that I held in DBS, the value, simply because it's sold, has actually increased substantially. So it's only proper asset allocation that I actually have sold down some of my DBS stake to actually go into other stocks, particularly US stocks that we specialize in our investment classes. And then thirdly, ladies and gentlemen, do not be fooled by some of the analyst report that came out to say, actually DBS Bank, despite up so much, 83%, because it's trading at a PE of below 10 times, is still cheap. To me, ladies and gentlemen, if you look at the PE, of the price earnings ratio of DBS Bank, it is actually on balance with the global grades, for example, like Goldman Sachs, JP Morgan, Bank of America, as well as actually Wells Fargo. So it is actually not cheap in that perspective. So yes, ladies and gentlemen, we specialize in helping you to identify the real of the results, as well as to do what we call perfect market timing, with respect to guiding your investments. So better investor education is something that we have been doing. This is our 36th year doing, and we continue to excel in that. So hopefully this week's video has been informative and help you to actually analyze your investments on DBS Bank as well as the other two banks to come. So do follow us, subscribe to us while we keep you posted on the results of UOB and OCBC and what to do with your stock if you are holding on to them.